Welcome to Podcast, the Business of Dentistry podcast, brought to you by Practice Plan. Podcast delivers the best business advice, real-life stories, and practical hints and tips to make your practice a more profitable and sustainable business. And now, here's your host.
Welcome to this latest edition of In the Loop with me, Nigel Jones, one of the directors of the Practice Plan group of companies. And today I'm absolutely delighted to be joined by Paul Graham. Hello, Paul.
Hello, Nigel. Thank you for having me on again.
Well, I always enjoy our conversations, and I suspect that we've got some regular listeners, but just in case we've got people encountering our discussions for the first time, could you give a bit of an insight into your background?
Yeah, certainly. I'm Paul Graham, Managing Director of our medical team at Christie Co. Medical encompasses two main areas of brokerage in Christie Co, which is pharmacy and dental. For me, dental is very much the baby. It's an area that I spend 90% of my time on. In brokerage, we'll act for independent sellers to independent buyers, right up to other opportunities where there's corporate divestment or the sale of single sites to mid-size and larger size portfolios. Range of buyers who are active and who we typically transact to can range from independent buyers, small groups, private equity.
Great. Thank you very much, Paul. I sort of hesitate sometimes to ask you to introduce yourself because I think Christie Co have done such a good job at getting themselves into the market, into the awareness of the market, particularly with things like we're going to discuss today, which is the annual market review you produce. I think you've done a very a brilliant job, but a very useful job in terms of whether you're an associate contemplating practice ownership, whether you're a practice owner contemplating your exit, whether you're a group, you're appealing to an awful lot of people with that. So I'm really looking forward to today's conversation. And I mentioned the market review, and that came out last month. I presume you're pleased with it and how well it's been received?
Very pleased. We always kind of get to the point of it's going live and we're launching it, and that sentiment of this is our best one yet. Now, it doesn't really matter what we think, though. It's what the receiver thinks, and the feedback's been overwhelmingly positive. And I think the response just generally across those who we're speaking to in order to put the report together, the examples that we have in there, the case studies, the sentiment survey, a lot of good work goes into it, and it's nice to see that it's generally considered useful to the market.
Yeah, I think it's definitely considered useful, but I think that point you've just made about case studies is quite an important point, actually, because I think inevitably you're referring to a lot of statistics and a lot of averages, which you've got to interpret with a degree of care. And I think the beauty of the case studies that you've included in the report is I think it highlights how each case is different, and you have to look at it on its own merits, which seems to be a really important point for you.
Yes, yeah, definitely. I think at times, conscious generally, things can be either text heavy or stat heavy, and I think it's important to bring the real life and ultimately kind of giving a face to a name of some of those examples that we have in the market, the sentiment, generally bringing it all to life, which is good.
So speaking of bringing it to life, I've got loads of questions, and I know we won't have enough time for all the different tangents I could take this discussion down. But I thought I'd therefore cheat and just say to you, what would you say were the key points that came out of the report?
Yeah, I'm kind of happy to get straight into it. That really strikes me. I was kind of sometimes take a bit of a helicopter view when I'm putting the report together, and it's not until we start putting stuff in black and white that you think, oh, this has happened in the market. This has been going on. This is quite good, or this has been a challenge. And it's nice to reflect on that period. And what I would say is it's been an incredibly challenging market post mini budget, late 22. Market definitely recalibrated and corrected quite significantly in 2023. There was a recovery period last year. And then what we've seen this year is just a resurgence again in activity. And that I think the kind of cohort of independent operators and buyers and small groups, but independently operated, they've generally underpinned the activity, and I think that's kind of here to stay. But what's opened up this year so far is the general appetite and interest again from some of the larger investors, some of the larger trade buyers, still very selective in what they acquire, but now coming to the table again, which is really nice to see. And I think the main purpose of that, or what that means for the market, is that there've been certain examples of deal sizes that were limited in terms of who was capable for a purchase of that size. And when effectively corporates or larger investors are out the market, there are operators who own big practices, high value. They've been operating very well recently. It's been a good 12 months of trading, but they've not necessarily felt confident in thinking, I'll bring it to the market because there's a buyer there. And I think now that is starting to change. So a bit of light at the end of the tunnel for some of those larger operators looking to sell. And generally the kind of sentiment, the enthusiasm happening in the marketplace. It's nice when that happens from top down, not just bottom up.
Yeah, no, that's very interesting. And that was there's a couple of things in that I'd like to explore a bit more. In a sec, maybe that sort of shift from quantity to quality, which you alluded to just with what you were just saying, but then linking that to where the larger groups might be, because I was going to ask what you think the impact of the My Dentist sale will be on the appetite to come into dentistry. I know you make a reference to it in the report, but yeah. I'm particularly mindful of the fact that you will have quite a few private equity houses invested in dental businesses who might be coming more into that 3 to 5 year period of their normal cycle. So I was wondering how you see that playing out over the next year or two.
Yeah, Nigel, really good question. And I would say this is an important point for the market to note. When the news of that transaction had happened, there was an immediate sentiment, particularly from larger trade operators, the corporates in the market, who talked the market down. They were referencing the size of the My Dentist deal, only selling for sub 9 times profit. Therefore, the whole market will reset on that basis. And ultimately, if single sites are being acquired, then it's gonna knock a couple of points off the multiple. And that's a really crass way of looking at it, and it's incorrect. There's no evidence of that. There's no comparable evidence of those examples in the market. The exact opposite, in fact. I think when we look at the My Dentist deal in isolation, there is a limited buyer pool of buyers who are capable of a purchase of that size, that scale. And ultimately, when we're talking about multiples of EBITDA, multiples are generated from demand from buyers. And naturally, if you've got something that's single site and there's 5 or 6 buyers for it, and we're seeing those types of deals sell between 6 and 7 times EBITDA or 7.5 times EBITDA, there's no erosion on that multiple there. And ultimately, those are the examples that we're still seeing happen in the marketplace. There's not been new deals agreed at 4 times EBITDA, 5 times EBITDA, like some of the corporates were suggesting on the back of the My Dentist deal. And then there's another sweet spot of still some very large deals happening in the marketplace. And this is the case study that I would reference. We're running the process on a couple of larger groups just now with a sweet spot of EBITDA between 5 and 10 million pounds. And these are gathering significant interest from selected corporate operators who are kind of honing in on the opportunity, being very scrutinizing it more than ever before, but the interest still exists. But also private equity who recognizes an opportunity to come into the market, build a platform at that point, and effectively become a new corporate. So the My Dentist, if you were looking at the My Dentist deal, if you were looking at it one-dimensionally, people might think, oh, there's no arbitrage on the multiple anymore, and it's if that can only sell for sub 9 times, then it's going to kill the rest of the market. It's just not the case, though. there's such a wider part of the market where it's trading very well.
Yeah, that's very interesting. And I don't think this is a mischievous question, but that shift from quantity to quality implies that there was a challenge with quality before, when it was just scale that was being sought. So without making any specific reference to any one particular corporate, almost the more sites you have, the more risk that you don't have the quality. So I guess that must play into the valuations.
It definitely does. It definitely does. And whereas the opposite of that would be the investors looking at it today, if there's something that's a little bit more controllable with 20, 30 sites, and they can use that as a base to grow from. And perhaps there's less bad habits within the group. Let's kind of describe it that way. That would be more attractive than something that is probably perhaps either out of control or just needing reshaped, or takes a longer period of investment and time and management. And absolutely, that will impact those who are interested.
Yeah, and I interpreted some of the sort of press releases and things that accompanied the My Dentist sale, is that it seemed to be much more an inward-looking focus about enhancing the operational performance of the existing portfolio, which seems consistent with the whole quality strategy. And I think that's quite interesting to see, that there is that recognition that they potentially have not given it the focus that it has done historically.
Yeah, you're absolutely right. And I think recently that reshaping of the portfolio, that's a great piece and success for My Dentist, the way they've gone about it. So I think credit where credit's due. I think there's probably a lot of portfolios, a lot of corporate operators who maybe had that degree of focus over the last couple of years when they've been fairly inactive in M&A and not growing their portfolios. They've definitely been tidying up the back garden.
Yeah, and I guess that's where I was leading to with my last point, is wondering how much more of that there is to go. Do you have a sense of that at all?
I think looking at how the pipeline is shaping up this year, and sorry, by reference to pipeline, that is the example of what Christie Co use on deals being agreed, going into the legal pipeline between buyer and seller. Over the last 9 months, so year to date, it's grown significantly. And I would say the sentiment and ultimately the stats in our market report back it up as well, that I think that period where those corporates or mid-size operators were perhaps stagnant, they're now doing something about it. These operators are generally private equity backed. They have to grow. They have to invest. They have to get bigger. Improve their scalability and efficiency, and ultimately we knew that they could only remain stagnant for so long. So I think on the basis that we're seeing interest rates coming down, bit of confidence returning, that's nice to see that we've now got that investor back at the table on some of the larger deals again.
Yeah, no, very, very interesting. You sort of alluded to there, when they're private equity backed, they have to grow, they have to scale. So there's a certain amount of pressure that is associated with being private equity backed. And I wondered, because one of the phrases in the report that particularly struck me, and I've written it down here, is legacy-focused exit plans. Now, I thought that was quite interesting, because that says to me it's more than just the money.
Yeah. I think in the past, we've probably seen those larger operators take the approach of just an EBITDA grab. They've been acquiring not so much anything and everything, but near enough there. And I think that's generated some success for some corporates, and for others, it's been their downfall. And I think generally where we sit just now, though, whilst the corporates are coming back and they're active again, they are very specific on what they want to acquire and buy. And that's not a bad thing. I think that having that focus and where their legacy in the past was probably a bit different, strategy was a bit different, they know exactly what needs to be in place to make it work now.
Yeah, and with that in mind, within the report is this sort of identification of NHS practices and even mixed practices potentially losing a degree of attractiveness. And is that all part and parcel of this focused strategy around quality?
Yeah, it definitely is. I think whilst there's a small handful of traditional corporates still with a significant appetite on NHS, I think generally those who are looking at private and good quality private and mixed practices just now, they're really honing in on those examples, and I think that's a good thing when we see the corporates who are, probably recognizing that in the past they've acquired a fully NHS site or in a location where it's been difficult to recruit. And ultimately, the business hasn't been a success. They've had to then divest that. They've kind of learned from the mistakes. The worst thing they could do is then fall back into the same trap again. So it's nice to see that the criteria, the investment criteria of what they're then looking for has been reshaped. They know what can work and how they can improve it. And I think that's an important feature of the marketplace just now. But there's very much the general view of those who are acquiring particularly larger type practices that they are honing in on a race to quality over quantity.
Yeah, that makes sense. Just returning to the NHS specifically. So there was reference to resilience of private practices, and I think I was interpreting that in two potential ways. So it'd be interesting to get your take on it. One was the workforce point that we touched on today and previously, the challenge of recruiting and retaining people into a largely NHS practice when there are vacancies in private practices. And then I was also then wondering if the resilience related to patient attitudes as well, and customer attitudes, I suppose, actually more precisely, because with the NHS you have a customer, or if you work with several ICBs, it's the ICBs that are effectively your customer, whereas private practices with thousands of customers may be a bit insulated to that. So I wasn't quite sure, was it about workforce, or is it also about that sort of customer point?
I think it's a bit of both, Nigel. Actually, I think when you look at it from a workforce point, you're absolutely right. I think the examples that we see, those who are fully NHS, there's perhaps less investment in the practice. But, they are those types of practices that we're tracking just now and speaking to those operators. They are finding a massive challenge in recruitment of nurses and associates. Private practices, and I think the behaviours of the consumer, the patient spend, they generally feel like happier places to be. And that probably is extended through not just a patient perspective, but also the staff that's working within a practice as well. I think those types of businesses that we're seeing just now, I would almost kind of categorize them into two. There's two areas of private. There's high-end elective, and just now they're probably finding it a bit of a challenge to maintain the levels of income they were once delivering post-pandemic. But their core part of the business, good general dentistry done privately, is holding firm. And then on that note, when you look at those core private practices doing good general private dentistry, that's here to stay. That is here to stay. I can't blame them for that. When you look at the press, you turn on the news, there's perhaps a profile of a certain patient, a certain location that will very much lean into the NHS when it becomes available. But I think those practices that are delivering private dentistry and delivering it well, their brand, their identity, their reputation, that's not going anywhere other than holding firm.
Yeah. I mean, that was interesting, actually. I mean, there was certainly more positivity within the report about the future of private dentistry, although I was slightly surprised at how negative the profession as a whole is feeling, because there aren't many people feeling, or a small proportion feeling positive. They're either neutral or negative about the future. And yet any industry where you have a constraint on supply, but demand is holding up in the way you've just suggested, people would kill for that. So there's something not quite happening.
You're right, and I would almost probably put it down to the sentiment of everybody's feeling it. The cost of everything is increasing, and the implications of rising tax thresholds are adding to that as well. So there's probably two components infiltrating that sentiment, when in reality, kind of what is evolving at the core of a practice is probably generally quite positive.
Yeah, I agree. The one of the bits of the report that I really enjoyed was Raj Rattan's Q&A type session, where he used his crunch analogy.
Yes, analogy, really good.
Yeah, very, very neat. And in a way, that sort of, I think, could encapsulate why there's some of that negative sentiment, because there's that, we're getting to the point now where actually we're going to go beyond the point of no return with NHS dentistry. So something needs to happen. And I've been pleasantly surprised by the sounds from people like Stephen Kinnock, the Minister of Care, which feels like they are going to grasp the nettle this parliamentary term, which, it's long overdue, but at least it sounds like it's going to happen.
We live in hope. I think you're absolutely right on that point. When I think the topic has been discussed for so many years, the improvements, the enhancements, and very little, in the scheme of things, very little gets done. I think that skepticism kind of comes into play. You just become a little bit more pessimistic. Fatigue kicks in. You just think this is not going to. What's different this time? What's going to change? And I really hope that at this crossroads, something is going to impact the sector, NHS specifically, more positively. I think there's a significant need and demand for it. There's no denying that. And for as long as that's missing, we're always going to see, I think, a resurgence and significant growth in private dentistry. It might come in waves at a certain point. It might plateau if there's moments where NHS dentistry, this is a better offering, patient access, patient care is better. But I feel sometimes a bit pessimistic about it as well. You can probably tell by the way my voice has changed about it. Can something so significant change to really turn that around? It's yet to be seen.
Yeah. I there won't be any more money for NHS dentistry, and all of the utterings about we need to cut our cloth accordingly speak to a potential change of approach for NHS dentistry, which I would hope ends up more honest and more transparent, rather than trying to pretend that the finite resources they've got can enable the NHS to be everything to everyone. So I'm with you on hoping that we're at quite an important point. I think the report used the word pivotal in relation to last year in terms of the NHS. It feels like we're in a pivotal phase for that as well.
Yeah,
and I had, like I said, so many questions I'd like to ask you, but I'm really conscious that we've come to, because I would advocate that people go to the report and look up the stuff about the deferred consideration and how that's varying, things like the difference in multiples between owner operated and associate led, which I found really interesting, and then when you look at the fact that the multiples might be low but the EBITDA is generally higher, and so there's a sort of balancing of it. There's so much useful stuff within the report. So I really hope people pay attention to that. So just as closing words, is there anything you'd like to say to the people listening?
Yes, certainly. Probably just to piggyback on what you were saying then, Nigel, you're absolutely correct. I think dentists, clinicians have a lot to do in their day job. Their heads down and they're focusing on the day-to-day work. And ultimately, they don't necessarily need to or want to know about these elements in the marketplace just now that's happening. But what we always want to do is kind of extend an olive branch out to those who, when that time comes, to be able to offer support into the market. It's not always about selling. Just now, there can be a a bit of an educational piece without sounding condescending, to know about the market, to know what I should be looking at in 5 years' time, who's actively buying, who's actively selling, just a bit of a general educational piece about the market. And that's, for me, one of the most enjoyable parts of the job. So that would be my closing words. Those who are perhaps curious or contemplating, but no guarantee, don't worry, please reach out and I'd happily have a conversation.
An excellent note on which to finish. Well, thank you very much, Paul. Really appreciate your time today, and look very much forward to speaking to you again at some point in the future, because I always run out of time. So I've always got loads more I can explore with you. So thank you very much again.
Thank you, Nigel. Thank you very much.